So let's dive right in. We got a question about these, insurance cum investment products.
Yeah.
And especially, are they worth it in the Malaysian market? So we're going to use this blog post from Money Moves Malaysia. It's titled, "An insurance cum investment product can be valuable for insurance coverage, but not as an investment."
Okay.
Quite a mouthful, but it gets right to the point. And actually, while I was poking around their blog, they had some other interesting stuff. Like they were talking about how your house, might not actually be the investment you think it is.
Right.
But first, let's break down these combo products. Like, what even are they?
Essentially, it's taking two things, insurance coverage, and then also trying to grow your money at the same time. The blog post specifically talked about ULEPs,
Okay.
unit-linked insurance plans,
Right.
and endowment plans as kind of the common examples you see in Malaysia.
Yeah, they try to give you that kill two birds with one stone kind of appeal. But the blog post really emphasizes that this convenience could end up costing you.
For sure. It's kind of like going to a fancy restaurant, but then you realize, oh, it's a prefix menu.
Right.
It seemed like a good deal, but you get smaller portions and then you pay more in the end for, what you actually got.
Okay, so now I'm getting hungry and intrigued. So tell me, what are some of these hidden costs?
Well, think about it. Like each time you pay your premium,
Yeah.
part of that money, it's not going to your investment or your insurance coverage.
Right.
It's getting taken out for all these different charges, like premium allocation charges, policy administration charges, fund management fees, and even mortality charges.
Wait, hold on. Mortality charges?
Yeah.
What are those?
So it's basically the cost of insuring you against, mortality.
Right.
You can almost think of it like, when you rent a car and there's a wear and tear fee.
Oh, okay. Okay.
Yeah, like it's covering the potential cost of you, not making it.
Gotcha. So it's the price of the safety net.
Exactly.
Okay. But then how does all this affect the investment side of things?
Well, that's the real kicker. These fees, they can really chip away at your returns over time.
Yeah.
Imagine like a termite colony slowly munching away at the foundation of your house. You might not notice it at first, but then eventually there's some real damage.
That's a disturbingly good analogy. Okay, so the blog post is saying that, at least for ULPs, if you're younger, like under 40, you might actually get a better deal because the insurance costs are less.
Yeah.
So your investments can grow for longer.
That's a good point, and it really shows you how important it is to think about like your own situation and how much time you have to invest. But the main question is still, are you really getting the best deal for both your insurance and investment needs with these combined products?
Yeah, because the blog post seems pretty skeptical, especially when it comes to the investment returns. They say that for endowment plans, the way they calculate the bonuses can be super unclear.
Yeah.
And for ULPs, while your returns are linked to whatever fund you choose, they still often get dragged down by all those fees.
Absolutely. It's almost like you're trying to run a race.
Yeah.
But you've got this backpack full of rocks.
Yeah.
You might still get to the finish line, but it's going to be a lot harder.
Yeah.
And you'll be a lot slower.
Okay, that makes sense. So the blog post is basically waving a giant red flag and saying, hey, maybe you should just separate your insurance and investments.
For sure.
It's like they're saying, you can have your cake and eat it too, but maybe you need two separate plates.
I like that.
So that's what we'll dig into next, the benefits of that separation and how it could help you maybe save some money and have a better shot at hitting those financial goals.
Okay.
This is getting good. Let's keep going. All right, so we're back and ready to really dig into this whole separating insurance and investments thing.
Yeah.
Sounds good in theory, but where do we even start?
Well, it's kind of like, when you're building a house.
Yeah.
You wouldn't just use a hammer for every single task.
Right.
Right. You got to have the right tools for the job.
So instead of that one-size-fits-all hammer, we're talking about a whole toolbox of financial tools.
Exactly. And one of the first tools we need to think about is pure term insurance.
Okay.
And remember that stat from the blog post?
Mm-hmm.
A 30-year-old guy in Malaysia could get RM 100,000 in term life coverage
Okay.
for only RM 54 a month.
Wow.
Which is way cheaper than a whole life policy.
Yeah, that makes a pretty strong case for keeping it simple.
Yeah.
Just covering the risk of, death.
It is. And because it's only focused on that one risk, the premiums are usually much lower.
Right.
It's like renting a car just for, a specific trip.
Right, you just pay for what you need.
Exactly. You pay for the use of the car for that time period, and that's it.
Okay. But what about people who want, that lifetime coverage?
Right.
The blog post did mention whole life policies being a good choice, especially if you get them young.
Yeah, that's true. A whole life policy can be good if you want that lifelong protection, especially if you start young and might get some of your premiums back later. It's more like buying the car outright.
Okay, so you own it.
Yeah. You've got it for as long as you need it, but it costs more upfront.
Right. So it's really about what works best for you.
Exactly. Figuring out what fits your goals and, how much risk you're comfortable with.
Yeah, that makes sense. Okay, so we got the insurance part kind of figured out, but what about the investment side? What are some smart ways to grow our money in Malaysia specifically?
Well, the Money Moves Malaysia blog, they pointed out that traditional investments like fixed deposits or mutual funds often give you a better balance of risk and return.
Okay.
Compared to those investment parts of bundled insurance products.
Yeah, but those can seem kind of scary too, especially if you're new to investing. How do you choose?
Well, think of it like putting together a team of superheroes.
Okay.
You wouldn't want everyone to have the same powers, right?
Yeah.
You need a mix of different skills and strengths to handle different challenges.
So we're building a financial justice league?
Exactly. That's what diversification is all about.
Okay, I like it.
Spreading your investments across different things, stocks, bonds, maybe even real estate, can really help you manage risk and maybe get better returns.
Makes sense. Don't put all your eggs in one basket.
Exactly.
But how do we even know which baskets to choose?
Right. Well, that's where it can get a little tricky.
Yeah.
Especially in a market like Malaysia. You got to think about stuff like inflation, how the currency is doing, and how the economy is expected to grow.
The blog did mention those rising living costs in Malaysia as something to consider.
Sure.
When you're planning investments, it's like your money has to grow faster than prices do.
Absolutely. You got to be smart, be proactive, not just save passively. It's about making your money work for you.
Yeah.
And maybe even getting some advice from a professional.
So just like we see a doctor for our health, maybe we need a financial advisor.
Yeah.
For our financial health.
Exactly. Think of them like a guide, helping you through all the complicated stuff with investing.
Right.
Making a plan just for you and keeping you on track to reach your goals.
Okay, cool. So we've explored this whole separating insurance and investments thing.
Yeah.
But it's not just a one-time thing, right?
Right.
We got to stay on top of it. Yeah, it really sounds like financial planning is more of a journey than just a destination.
You got it. Yeah. Your financial plan, it needs to change as you do,
Right.
Like you wouldn't wear the same clothes now that you wore in high school.
Right.
Goals change, you might feel differently about risk. And the economy, well, it never really stops moving, especially in a place like Southeast Asia.
So it's not enough to just pick the right products at the start. We got to be ready to adapt.
Absolutely.
Think long term.
Yeah, think of it like getting a regular checkup, for your finances.
Yeah.
You wouldn't skip your yearly physical at the doctor.
Right. No.
Your money deserves that same kind of attention.
I like that. Okay, so looking back at everything we've talked about today, what's the big takeaway you want our listener to remember?
The most important thing is to be smart about it.
Yeah.
Don't let those fancy promises of convenience or big returns fool you. Really dig in, ask those tough questions, and make sure you're getting what you need, both for insurance and for your investments.
It's like instead of getting those meal kits, you realize, hey, I can make a better meal myself.
It might take a bit more effort.
It does, yeah.
But in the end, it's worth it.
So much better. And this whole conversation, it came from our listeners' questions, so.
They were curious. We dug in together.
We did.
And now hopefully everyone's a bit more informed.
For sure.
This is your journey. We're just here to kind of give you the tools to navigate it.
And speaking of journeys, thinking about all this, it makes me wonder, if you could build your own perfect financial plan, using the best stuff Malaysia has to offer, what would that even look like?
Ooh, good question.
What wouldn't you compromise on? What would make you feel secure and get you closer to those money goals?
That's a great way to put it. It's like you're the architect of your own financial future now.
Yeah.
And of course, for more tips specifically for Malaysia,
everyone
should check out that Money Moves Malaysia blog. They've got a ton of great stuff there.
So much good info, yeah.
All right, folks. So that's our deep dive into insurance cum investment products in Malaysia. Hopefully we busted some myths, showed you where those hidden costs can lurk,
and
got you thinking a little differently about your money. And maybe feeling ready to check out those fixed deposit rates.
Maybe even try some mutual funds.
Or who knows, maybe even dip your toes into real estate.
Until next time, keep those money moves smart and savvy.